The big news today, I suppose, depending on where in the world you are and what's been happening on international markets, is China imposing tariffs of 84% on US goods entering that market. That's in retaliation for the 104% tariffs the US imposed from today on Chinese goods. It's a full-scale trade war. Dr. Martyn Davies is an expert on China. He joins us now. Martyn, good evening. I mean, it was always clear Beijing would respond to Washington in this way, and I presume decision makers, they really had no choice. They have to look tough.
Good evening, Stephen. Good to hear Rob Lawrence's comments. We worked together for many years on trade and industrialization issues, and we're talking about this many years ago. It's dramatic how all of a sudden it's come to such a. It's been a bit of a crazy week, hasn't it? Anyway, but I think from a Chinese perspective, of course, they can't back down. And this is, I think, two things. This is really a sort of a dramatic end to, and it's been a slow burn, but if you didn't believe it a few years ago, you certainly will now, is the end of globalization as we've known it post, 1990, thereabouts. I think the second thing, the world's becoming increasingly divided, very much so. We'll see a China-centric global trading system. Thirdly, is countries like South Africa and other emerging markets, I think particularly in Southeast Asia, Vietnam, Indonesia, Malaysia, Mexico, which really were, which I think is, these were countries of very benefiting of Chinese offshoring, and enjoying. China was effectively de-risking by shifting manufacturing, as the multinationals, shifting manufacturing out of China into countries, developing countries, next tier, if you will, slightly less cost of labor, but arguably as productive, purely for access into the US market. These were Trojan horses, effectively, for Chinese trade into the US. That's come to an end. And as Rob was saying about, what is a country's development strategy? It's no longer industrialize and export to the US. It's way more complex than that. And I think the last point, really, is stating the obvious, is the US has undoubtedly, traditionally underpinned this era of global free trade or liberalized trade. All that work done and the trust built has been destroyed in the last week or so. I think for me, those are the sort of key highlight macro points to point out.
I don't know if there's anything in this, but how do you assess the figure of 84%, which China has imposed on the US? It's in response to 104%. I mean, is there messaging going on with these numbers?
I don't know. I think we mustn't put too much emphasis on numbers, and this is some, silly, seemingly negotiating that's being generous sort of tactic here. Of course, previously China undoubtedly was a you could argue to both sides effectively. It was a manipulator of currency. It works both ways. I mean, from the should we say Fed monetary policy in the US has had not a dissimilar effect in many areas, but you've seen. I step back a second. I'll say this, Stephen, is that we go back to 2008. The US Fed, by and large, post Lehman Brothers, the US Fed, rethinking COVID policy recently, has been a force for global instability, fiscal instability. And what I mean by saying that is that it's always been, regardless of Democrat, Republican administration, it's our dollar, it's your problem. Now what we're seeing, but US has been, relatively speaking, sort of relatively predictable when it comes to trade. That no longer is the case as well, clearly. And, you've seen, I think, the bulwark of stability and consistency, yes, of course, incredibly self-interested at the same time, has been China. But at least it's predictable, very predictable. Where the US has become incredibly unpredictable, whether from a fiscal perspective, the US Fed, whether it's now trade policy, and that is clearly, catastrophic as Robert, set out and is causing so much angst globally now. But for me, what does it mean for us in South Africa? I mean, China's already been our single largest trading partner since probably 2008, 2007, thereabouts. Obviously, most of that is commodities to the Chinese, but we'll see this dramatic rebalancing. And I was becoming deeply skeptical. I think we've had this conversation around the notion of BRICS in recent years, too ideological. And I think our government has been far too politicized around BRICS and less pragmatic around trade. That's going to change dramatically. There's not been one preferential trade agreement cut by our government, as I'm aware, with any BRICS partner over the last decade or so. It's all been rhetoric and politics and geopolitics, which for me was unnecessary. Now we're going to see a revitalization of BRICS, translated, i.e., global South, intra-South-South trade. Let's call it BRICS plus. But hopefully it'll be less politically antagonistic, and that hasn't certainly benefited us now as an economy, as you were talking earlier to Robert about US-South Africa sort of relations. It certainly hasn't benefited. So finally, can we get BRICS and the emerging markets club, of which we are a part, to be more practical, more pragmatic, and commercially focused in the interests of the national economy and the interests of South African companies, rather than just rhetoric-based? And I think that's a key going forward. That's what's going to emerge at the end of the day, as we start to diversify trade, if we can. But we can only diversify if we ourselves have a more diversified economy. And that's about services.
Sure. I mean, lots of things are going to happen now. I mean, the cost of goods from China in the US will now double. So those goods won't be sold in the US anymore. I mean, in the short term, where do they go? China's going to be looking for other places to sell them. Do they come here? I mean, I can't even begin to imagine the short-term disruption we're going to see in supply chains.
China's been an exporter of deflation for the last generation or so. The China price. The USB has been an exporter of inflation through Fed policy. We're already seeing China's look at let's make it real, ArcelorMittal in South Africa. We've already seen how Chinese competition has decimated industries. Traditionally, it started with textile garments. It's moved up the value chain to electronic components extremely quickly. Now, more recently, obviously, it's steel, iron ore, or steel, should we say, in product, amongst other things. It's automotive the last 2 years. So China's an exporter of deflation. Of course, prices are going to rise. The Fed's in a very tricky situation. We thought we were over that hump, sort of through COVID, of rising interest rates. Now, again, blockages to trade is inflationary. This is extreme brinkmanship between Beijing and DC. Unfortunately, I think, I was listening to the Prime Minister Lawrence Wong of Singapore talking, I think it was yesterday, about, we're going to be collateral damage to this. And countries that are extremely open to trade, or are trading, of course, will find it far more difficult in future to grow their economies. And this is South Africa. We need to, amongst many others, we need more globalization, more trade, more diversification. But the terms of engagement now are becoming significantly more challenging and making it far more difficult, obviously, to achieve those ends.
Dr. Martyn Davies, really appreciate the time. Thank you very much indeed.